What if I told you two financial institutions control more money than most governments, yet you've never seen who truly pulls their strings? Behind the polished logos and public speeches, the International Monetary Fund and the World Bank aren't just economic advisors. Together, they manage over $1.3 trillion, reshaping the economies of over 100 nations. They promise development, they promise stability, but who really controls them? Today, we pull back the curtain on boardrooms you're not invited to, meetings you never hear about, and decisions that quietly shape the lives of billions. On paper, the IMF and World Bank are democratic institutions. Each member country holds voting power. BS lies a global power structure hidden in plain sight. Based on its financial contributions, the US leads with about 16.5% in the IMF, followed by Japan, China, and Germany. Sounds fair, right? But the deeper you look, the more the democracy begins to crack. Dr. Sarah Mitchell, former World Bank economist. The voting structure is just window dressing. Real decisions happen behind closed doors, between a handful of powerful nations and their financial sponsors. And those doors? They're tightly locked. Each organization is controlled by a 24-member executive board. But 5 countries, the US, UK, France, Germany, and Japan, hold permanent seats and veto power. Since 1944, there's been an unwritten rule. World Bank equals always American. IMF equals always European. Behind the scenes, elite financial families, corporations, and private interests shape decisions that impact billions, far from any public vote. Bretton Woods. The world rebuilds from war. But this wasn't a negotiation. It was a victor's summit. 2 men led the charge. Harry Dexter White, U.S. Treasury, backed by Wall Street. John Maynard Keynes, UK economist, backed by the City of London. These weren't economists. They were architects of a system designed to keep Western financial dominance intact. The IMF and World Bank offered loans, but only with strings attached. Structural adjustment programs forced developing nations to privatize public assets, cut government services, deregulate markets, remove trade protections. Maria Rodriguez, development policy analyst. These weren't suggestions. They were economic chokeholds, disguised as help. Hospitals shut down, utilities sold off, teachers unpaid, and profits flowed straight to foreign investors. The U.S. Treasury pipeline. Every World Bank president has had ties to Wall Street, the Fed, or Treasury. The European banking loop, IMF directors like Christine Lagarde move from national ministries to central banks, creating a closed financial circle. Corporate overlap. Many board members sit on boards of private banks and corporations, shaping public policy to benefit private pockets. The Rothschild thread. Legacy power persists through financial networks. Not headlines. The BlackRock factor. Today, BlackRock, with $10 trillion under management, consults for governments and influences global financial policies directly. 2008. Global meltdown. The IMF and World Bank bailed out reckless banks, not citizens. Meanwhile, countries like Greece, Ireland, and Portugal were forced to slash healthcare, sell public assets, pay debts to the very banks that crashed the system. We weren't there to help economies. We were there to protect the elite. Former IMF insider. So who really controls the IMF and the World Bank? Not the developing nations, not the people they claim to serve, but a network of Western elites, financial dynasties, and corporate power players working to preserve control, extract wealth, and maintain the financial status quo. And this is just the beginning. In the next video, we expose how central banks are part of the same machine, and how even your national currency is tied to decisions made behind closed doors.